Good morning, everybody. Happy Monday. It's August 19th, 2024. Great to be with all of you today. My name is Bob Lang. Got a lot of energy here this morning. Great to be with you. It's almost 9 o'clock here. Sorry, we're getting started a little bit too late today, but, you know, better late than never. Let's talk a little bit about the markets and what's happening right now, what's going to be happening later on in the week, and what's happened the last couple of days. So we've had a really nice rally in the markets since that fateful day 2 weeks ago today, when the S&P 500, we woke up in the morning and we saw the S&P futures were down 200 points on the S&P futures, and that is probably close to 3.5%. We saw the Nasdaq and the Dow Industrials both in rare form down over 1,000 points each at one point. So it's been quite a comeback for the markets ever since that day on August 5th. Now, that being said, a lot of that move on August 5th and even the day before that, which was the Friday when the jobs report came out on the 2nd, was attributed to this yen carry trade unwind, right? And that pretty much dissolved itself in about 2 days. Basically by August 7th, that was all done. And once the smoke cleared, we saw volatility come down quite sharply, and buyers started to step up and buying the markets and buying stocks. I guess maybe what happened, fundamentals started to take over, and we saw good earnings start coming out the last couple of weeks, and that helped drive the markets up a little bit as well too. But we also had a big drop in yield. And I'm going to show you that right now. We have the 10-year yield here that is currently around 3.88, just under 3.9%. We had a huge drop in yield towards the end of end of July, all the way down to the beginning of August. And again, that was kind of driven by a safety trade with that yen carry trade unwind. But we did bounce back, but we did come back down a little bit lower here. And why is that? It's because the market is anticipating an aggressive move by the Fed in rate cutting cycle, right? So they're looking for, probably the market is really looking for about 3 rate cuts into the end of 2024. We have 3 more meetings left. We have one in September, one in November, and one in December. So the market is looking for a rate cut at each of those meetings by the end of the year. Now, important week here, right? Because it's not a Fed meeting per se, but what it is the Jackson Hole Conference, annual conference that is hosted by the Kansas City Fed, and we'll have some Fed speakers out later on today and later on in the week, and then on Friday, Chair Powell will be giving a speech. I don't know what the title is yet of it. I haven't looked at it, but it's probably going to be something, higher view related to what the economy is doing here in the United States and what Fed policy may be down the road. So I think the expectations for the market, a lot of people who are watching this speech on Friday are anticipating that Powell is going to say something about interest rate reduction, a change in policy, monetary policy going forward. And he may be that the goal here for the markets is that he sets the table for a rate cut in September with this particular meeting. Now, we'll have the Fed meeting minutes coming out on Wednesday afternoon about 2 o'clock in Eastern time. So we'll get actually have it before we hear Powell. We'll have an idea of what the Fed was thinking back at the last meeting at the end of July about interest rate policy and what the discussion was about back then. I think that meeting, those meeting minutes are going to be extremely important, probably more valuable than what Chair Powell is going to say on Friday. I know the market is looking at that as the opposite of that, right? They're looking at the speech by Powell as being most important. But let's think about this for a minute. What can he really say that is going to be any different than what he said in the press conference, or that what the Fed members said in the statement from the July meeting? Not really much different, right? Nothing really has changed other than the fact that inflation continues to ride down. It's been trending down for about 3 to 4 months. I think that they're going to be more pleased about that. They wanted to see more data. They're seeing more data, and it's really looking quite friendly for a change in monetary policy towards a more dovish Fed. So we'll see what he has to say. But again, I think taking a look at those minutes on Wednesday is going to be extremely critical at this point. So as far as other bond yields are concerned, let's take a look at the 2-year. So I watched the 2-year Treasury yield and the yield curve. So this one is interesting because the 2-year yield is just flickering above 4% right now. And really, this is the main yield that most investors and traders look at as it relates to the Fed funds. And this is really a projection of where Fed funds rate is going to be 2 years out from now, right? It's about pretty short term. So the market is telling you that Fed funds futures are going to be about 4% 2 years from now, which is August of 2026. And we're currently at 5.25 to 5.5%. So that would be an aggressive 6 rate cuts into 2026. Kind of makes a lot of sense, right? If we get 2 or 3 this year, we get 2 or 3 next year, and then maybe 1 or 2 in 2026. So maybe the 2-year yield, the bond market here is in alignment with the path that the Fed is going to take. That's the problem here, right? In the short term, in the Fed funds futures earlier this year, the path that the futures were taking was not in sync with what the Fed was saying or even doing, right? So once they get in sync, then we can have a market that has a little bit less volatility and a little less movement up and down, especially down when these things start coming back together again. All right, so I'm going to just show you a couple of other charts over here. What I want to show you here, I wanted to show you the new highs, new lows on the Nasdaq. That's really starting to improve, and that is on a buy signal now for us. The New York Stock Exchange high-low list also on a buy signal. We had more than 100 issues hitting 52-week highs last Friday and actually on last Thursday. So Thursday, of course, Thursday and Tuesday were huge days for the markets, up more than 1.7% on the S&P 500 on both those days. And we did have a little bit of follow through on Friday. This morning, we're trying to continue the move up. We're up 8.25 points on the ES futures. Nasdaq up 26, up a little bit. See, the S&P 500 closed on Friday at 55.54, really right on the support line, which is about 55.50. So if we get another close or two above here, we're not too overbought in the intermediate term. Short term, certainly overbought right now. So we could have these little pullbacks come from now and then. So the new highs, new lows list is certainly a nice positive if you're bullish. Some names I'm looking at this week. I know there's several earnings coming out. We have Palo Alto Networks coming out later on tonight. That's one I've got on my radar for tonight. Lows tomorrow morning. I'm probably not going to be looking at that one, but I am looking at TJ Maxx, which is TJX, coming out Wednesday morning before the open. That's an interesting looking chart. Also Ross Stores, which came out with really great numbers last time around. It pulled back a bit and rallied up on the strong retail sales number last Thursday. And then finally, I think that's it. So we have Workday and Kava. BIDU, which is one that I started buying on Friday. Good looking move up here. Nice little push up past resistance from over here. It's certainly in a downtrend. Don't get me wrong. It's not super bullish over here, but it's going to make a move. And I think it's going to get right back up here to fill that gap, which is about 101 from back in the early part of July. So at being at $88 right now, that would be a nice 24% move if we can get up there to fill that gap. So I'll be watching that when that comes out Thursday morning. But other than that, I'm just really basically playing it close to the vest here. I've got some puts on. And just I always like to have some puts on it. It helps me buy calls if I want to get involved in and find some ideas that I want to get onto. So let's see what other stocks are moving this morning. Let's take a look at. You can see that Google's up a couple of dollars. AMD made a big purchase today of an AI company. They were up a lot earlier. They're down. They're only up a little bit right now. A couple little biotechs are up, and we see Amazon pushing through to 178. I think Amazon's one that you got to take a look at here. I added some Amazon longer term name calls into November and into January of 2025. But I think this stock has gotten really beaten up a lot, and it's time to take a look at adding some Amazon. So I think it's going to be it, everyone. Have a great day. Appreciate all of you listening to me today. And if you could please, pass this along and forward this along on social media, that's great. And we'll be back on Thursday morning and with another edition of the Daily Bites. And again, trade well today. If you're in the chat room, I'll see you there a little bit later. And take care. Have a great day of trading and good luck. And don't forget, Fed meeting later, Fed comments later on this week. We'll be talking about those on Thursday. Take care. Bye.